Hello, this is the Chart Profit video, 29th of June, approaching an hour and a half into the trading day. This is from the pre-open today. We're looking at the E-mini S&P. A major level of reference at the moment is this level down here, 27.18. A few days ago on a minor time frame we were watching this level here at 27.72. Had a couple of value areas printed below that level, and then we saw the sharp decline at the start of this week to test the point of control here. The 12-month said that a value area or time printed below that level would be a negative. We did get that actually on Thursday, but the E-mini recovered back above that point, and it's a little higher today. And I've said pre-open that I have not marked aggressive selling since this month's high, since we saw the market sell off, and in fact I have not marked aggressive selling for 45 days. And you can see that on the pulse chart. The last time I marked aggressive selling here on the red bar on the spider was back in sort of early mid-April, and from there it's been green, which is significant buying. Two interesting things on this chart, and that's one of them, no significant selling, and the second being the fact that the spider has held this halfway point from this high to this low. I take these levels really seriously. If we see aggressive selling marked below that point, that would suggest we'd be printing below the point of control on the E-mini as well, and that would be a negative. But we're currently holding this point. The fact that we have not such a great looking pulse chart as we did a few weeks ago, there's some red here, so we can't make any assumptions. But if we saw this improve, the breadth and the momentum at the bottom here, and especially if we saw the significant buyers re-entering and making their mark above those two support levels I just mentioned, that would be a real positive in my view. And something else worth noting is the sentiment this week. For instance, here in the Lipper US fund flows, they reported equity fund including ETF outflows of $20 billion. That's in the week to the 27th of June. There's quite a bit of fear suddenly appeared in these indicators. Now that's the largest single weekly outflow since the 9th of February, but on a 4-week flow basis you can net that to a negative 35.3 billion. Now that is the lowest since 2008. That's the black line that you see here, and we said this was an extreme at this point, and here we're actually seeing that 4-week flow below those two numbers. So this is an extreme low. That's more typical of market lows, as you see here, then a marking that's topping out. And we also saw bulls percent fall sharply this week in the public poll, down at 28.4% bulls from 38.7%, and the bears jumped to more than 40%, 40.8%. That's quite a jump up from 26.2%. So if we net that off, bulls minus bears, that's a negative 12.4, and that's a 1-week fall from the previous net of a movement of a negative 24.9. That's the largest single weekly fall in the net position since the week ending 17th of November. We've seen the Investors Intelligence bulls as well. They're lower at 47.6. Bears slightly higher at 18.4. But we know that 7 weeks ago, 4-week moving average of net, that's the bulls minus the bears, 4-week moving average in black here, that fell to 24.4 at this point. That was 7 weeks ago. That was the lowest since November 2016. I'd say the sentiment at the moment is favouring the bulls. As I mentioned earlier, personally I would want to see significant buying being marked in these levels, like this one here, the 18-month on the spider. I want to see these levels holding. So that level's been recovered here, and we did dip down to test that halfway point off the high as we just mentioned. It'd be good if we could see the FTSE 100, UK FTSE 100 index back above 77.11, which remains its 3-month controlling price here. Just approached it at the end of this week. And this is the German DAX. The 2-year is at this point. It's been tested this week. A general positive again if we could hold that level. Let's review some of the other charts. This is the T-bond ETF TLT, and we've talked about this level here at 121, the major controlling price, and the 6th month down here at 118.50, which was support at this point. And to my way of thinking, a break above or below these levels will likely indicate the next directional move. Now TLT this week has gapped up, having been in resistance for a few days here, just suddenly a couple of days ago gapped up here on the open, and that puts TLT in a stronger position. So any hint of a higher low here, indicate a higher low, I think would look pretty positive. We talked about USO, the oil fund ETF, this level here, which is the 12-month at 12.79, and that is clearly a higher low above a controlling price. USO has now put in a new high for this move. GLD, the gold ETF, is struggling as far as its positioning goes below 121, which is the major. And just to review, 4 month was built in here. We just had a little probe back up into that level, and then we've come off, and then we've come below that controlling price. So this is a weak price location. May and June are particularly weak months in the seasonal pattern for gold. In fact, the low of the seasonal pattern comes in about now. The commitments data doesn't look that discouraging, and we're very oversold, so a little conflicted on gold at the moment, but if I was looking to buy it, I want it back above that major. Controlling prices and the way price behaves around them is the most important thing to me. If you're taking a view on gold, it's always good to have a look at the dollar index. It's been quite volatile in its oscillations around the 6-year controlling price at 94.80 at the moment. You want to see a clear higher low above that before anticipating an imminent leg higher. We have come quite a way since the major migrated down to 89.54 down here, so that's quite a rally, and the resistance came in bang there, and now we're oscillating around it, as I said. But does it fail here? Not sure. It tends to be more of a build going on at the moment than anything else, so just need to watch price at the moment relative to that 94.80 level. Just switch the chart to weekly time frame. You can see some of these oscillators like the stochastic momentum index getting a bit overbought right now. Price above this level puts it in a strong position though. Can we take a clue from the Euro FX chart? Just again, if you remember, the major migrated to 123.30 in here. We saw the decline. The 1 year emerged in here somewhere. We're currently still printing below that level in a really weak position. Just rallying a bit at the end of this week, but this is still weak price location for the euro. And the pound, well, at the end of this week, as I record this, it's just printing back above 130.170, which is a major level for the pound. It's controlling price, major control. Okay, so that concludes, and once again, thank you for watching.